Ex-FBI head Comey says he's got the goods on the president. The Democrats smell blood, and the stock market takes a dive, but then moves back to the upside. More about all of that as we start the show.
Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market suffered a down week, and it was a lot worse as Wednesday saw the biggest down day in 8 months, but then we saw Thursday and Friday bring a recovery. Stocks seemed firm actually early in the week, despite the fact that there was news that the president, or at least allegations, that he had shared some classified information with the Russians at a recent meeting. President denied that news, but then news came out that Comey had memos, a lot of memos, and one of the memos was that he said that the president asked him to back off the probe on Flynn, of course, about the Russian connection, and that could lead all the way to the president. Well, there was screams of obstructionism and the Democrats essentially going pretty wild across the whole landscape. And we heard whispers of President Trump and that President Trump would become President Pence. And lots of whispers across the halls of Congress. Well, maybe even across liberal media. Take a look at this.
A sense of duty to this country, a sense of duty to the Constitution of the United States of America. I rise today, Mr. Speaker, to call for the impeachment of the President of the United States of America for obstruction of justice.
Some of the questions? I have not called for impeachment.
Greatest desire is to lead him right into impeachment.
In order to do the impeachment, because as for me, I think it leads to impeachment, and I believe.
Impeach 45! Impeach 45! Impeach 45!
I'm sorry, I had to show you that clip. I mean, it's just unbelievable. Of course, that's Representative Maxine Waters, who said that Fannie and Freddie Mae were in good shape back about 9 years ago, completely missing everything that was going on there. So, I don't know, I had to share that clip. Nancy Pelosi comes out and she tried to calm things down. I said something good about her. And really, she wants to not people to be saying anything about impeachment. They want to keep it real quiet that there's a potential coup going on. Craziness, right? They appointed a special counselor, Mueller, to look into this whole thing, oversee this whole investigation about Russia that seemed to calm things down in here a lot. And even the scandal in Brazil on Thursday, which saw the Brazilian market move down 17%, really couldn't stop the stock market from recovering the way it has, with Thursday and Friday being a pretty big up day. Also trying to bring stability to the markets, again, is Fed's Bullard, who in a statement in St. Louis essentially said that, well, he sees the Fed as being too aggressive, and and he thinks that their plan of raising interest rates is too steep, and so that also calmed things down in the stock market. What we saw in the stock market was a week where it was quite volatile, but the indexes all finished right around fractionally lower. They are right now as we move into the final hour right now. The bond market has moved up 1 point in a flight to safety. The dollar, even on Friday, here as the markets are trying to recover, is in free fall. Man, that has to be some kind of a tell to something that is going on right now as the markets move in a positive way these last couple days. Gold and silver strong on the week as the dollar fell. Gold up about $25, silver up about 35 cents. And the oil market moved sharply to the upside for the second week. That's after a downside panic that we saw in the oil markets, where it's traded under $44 in an overnight panic, and since then has had about a $7 bounce to the upside. So it's been a good recovery for the oil market. Big week coming up for the oil market, as we've already had Russia and the Saudis and Kuwait agree to extending the time period out for the production cuts, but now there's whispers going on about deeper cuts, and that's what's giving oil a lift right now. So while stocks are recovered Thursday and Friday, you know, I think some technical damage has been done, and I'm going to show you what I'm talking about in a second. Most market participants, I've mentioned this on Twitter and some other videos recently, well, they've never traded a bear, or they have short memories. They've forgotten that we really do get some declines. And I've mentioned a lot lately that, you know, cash is really low in brokerage accounts, and that the fund managers' cash is around 3%, which is historically low. So there's, I think, news in the background in addition to that that sure seems to be scary, potentially coming out here. I say a top is being formed, and I want to show you some chart patterns right now that I think are important. Now, I know a lot of you are not technically minded and you're more investment minded, and that's fine, but I think I can show you some things that kind of make sense when we look at some technical patterns in here. So we're going to look at, I look back at the last 10 years of the stock market looking for something called kicker patterns, and I did a video on that for my members this week. Now, a kicker pattern is significant. What it means is that it's showing you in the chart that there's a significant tone change in the charts. Essentially, the market kicks away from an important high or an important low, and it's often on pretty good volume when it's in stocks, and these kicker patterns tend to give you important reversals in the market. I'm going to show you, as I look back in the last 10 years, some kicker patterns, and you'll be able to judge what's important. And I'm going to show you the pattern that we have in the stock market right now. So here is the S&P 500, and we're going back to 2010 when we look at this chart. So what I want you to see, now this is a daily chart in here. And what a kicker pattern is that you close up near the high, and then you have a downside gap that then gives you often a big down day. When that happens, it's a warning that there has been a tone change. Something significant has happened. Now, you'll note that when this happened in 2010, there was 2 big rebound days right there. Sound familiar, huh? I'll show you the pattern that we have right now in a moment. Now, what I want you to see is that this gave us a 17% correction back there in 2010. Yeah, that was pretty significant. It ended up to be a pretty big drop. So now I'm going to move forward in here in time, and I'm going to slide this up where you can see some more kicker patterns right in here. I want you to note here, after a correction in 2010, that there was a bullish kicker pattern. Yes, it closed near the bottom and had a gap on the upside, and it had a massive rally as the S&Ps moved up from 1180 to 1340, a 160-point move. What happened after that? Another bear kicker. There's your close near the high, the downside gap, the big down day. It followed through for a couple days, but then you had two big up days. You can see that right there. That ended up to be a 7.3% correction. Not a very big one, and still, you know, very tradable when you see that, and the pattern was successful when you look at that. Now I'm going to move forward all the way up here looking at 2014. Got to get up in here. Sorry for this moving up like this, and you will see these patterns show up right in here. So in 2014, moved a little too far. Let's come back. There were two bear kickers. There was one right over here, and that only brought a 4.4% drop, but you could see it was successful. There was not really the ability to get any kind of a rebound that you see right there. And here's the bear kicker pattern right over here, closing near the high and the downside gap. And then it had one day where it tried to return. And this was a 9.8% decline. Note that that ended also with a bull kicker. I just want to show you the quality of kicker patterns. And you can see that right over here as this bull kicker right there with the upside gap brought you a 14% gain. So you could see high quality patterns there when we look at kicker patterns. Again, it's tone changes, sentiment changes. It's sometimes just because a market is overbought or oversold, and sometimes it's news that changes the sentiment. Now let's fast forward to today as we look here all the way here at 2017. May 17th, the top of the market right there. 16th actually, and here is the biggest bear kicker that we have seen in the 10 years. Closes up near the high, the massive down day right over there on the big gap. That is a huge bear kicker that you see, and the return to the upside on a couple of days. Question is, as we've seen in past patterns, does this end up to just be the hook? Could be. You can see it's a perfect hook as I draw it, and that bear kicker pattern is reliable, as you can see, and often sets up for some pretty big declines. So there's your history lesson in the stock market, looking back, you know, the last 8 years or so, and you can see the value of that technical patterns. What happens essentially is that millions of investors are trying to get out of a small door all at the same time. I think that Wednesday's decline kind of tells you that the situation is like that. Also interesting, another little nuance for technical traders is that, you know, I've been expecting a top and been talking about the fact that there's deterioration going on and all that, and there was an opportunity here coming up that I thought that the market was going to decline. And when I looked at it based on the type of work I do, cycle analysis, it was suggestive of the fact that there could be a decline. Now, the little nuance is that in a window of opportunity of something happening, how big or how small is the movement? Well, the movement on Wednesday in this window of opportunity was huge. A 2% decline, you know, it certainly is a big down day, and the biggest down day we've seen in 8 months, as I said. And then you got to wonder about Bitcoins trading up over $1,950. I say, as I've said before, this means something, and I actually think it won't be pretty. So let's see if this kicker pattern works as it has in the past. It might take a couple more days and fooling around before selling hits. If we get above that level and make a new high over 2405, then, well, you'll know that's a bunch of hooey. But in the meantime, I think it's important to look at. So that is a look at some of the technical stuff that I follow, and I think that that was pretty interesting, don't you? So let's take a look now as we look at what happened this week in the market as we switch over to our 60-minute chart of the S&P 500. So here's that 60-minute chart right here. And as I said, you know, early in the week, even though some news came out that might have scared the market, it, you know, held up pretty well. You see Monday and Tuesday right in here, not a lot going on. Saudi and Russia agreed to extend those cuts. China pledged $100 billion in infrastructure spending. That is not very much for China overall. Note that, just a little side comment, President Trump recently said that the new budget's going to have $200 billion in infrastructure stimulus. What happened to the trillion dollars, sorry? Well, he says that, well, they think that it will come out of the private sector. Well, that's kind of a big laugh, huh? That's a lot like what we're going to see in the rest of the Trump program. As Mnuchin comes out also this week, and he tries to stimulate things by talking about the tax plan, which isn't likely to be able to happen very easily. So we saw an interesting pattern here on Tuesday. You can see that. That triangle pattern set up this break and this downside gap. Now, this is the overnight trading here on Wednesday, and you can see that the real trading, we opened up way down over here. So we opened up with that big downside gap I just showed you. It was all about Comey coming out and talking about that memo. Trump says no way. He says that did not happen. He did not tell Comey to back off the Flynn investigation, but Comey says he's got a memo on it, so it shook up the markets a lot as S&Ps were down some 43 points on the downside. Bonds, gold, they all popped up in a safety bid, and oil was weak but then reversed on the upside in inventories. Then came Thursday, and we start to get the bounce. This news about Brazil just absolutely killed this stuff. I'm going to show you the Petrobras, it's actually PBR symbol when we get into the worst of the week. This was really interesting about oil because there was some news out that said that, Canada and Brazil production was really going up. But then when the news came out about Brazil, it's like they changed their mind completely and said, well, maybe with the crash in the Brazilian currency, that it's not going to be so easy to get oil out of Brazil at these prices, so they started to bid it up again. And then, of course, we started to get comments about deeper cuts, and that brought higher prices even on Friday. So, and you could see here, Thursday, you got this rally right in here. Friday, you got the rally right in here. And as we move into the final hour of the day, we're getting a little bit of reversal here. We'll see how the last hour really trades as there's less than an hour left to go as I'm doing this recording. So that's a look at what happened this week, and essentially it held up early, a big decline, and then that rally in the market, as you see right there, as it tries to come back. But selling appears to be coming in here late on Friday, and we'll see how deep that selling goes. Here's our calendar for the coming week, and there's actually some big news coming out on Wednesday that you can see. The FOMC minutes will be released, and that's often a market mover. Very often a market mover. Earnings reports coming out are pretty light. We still have some retail reports coming out. Lowe's, Tiffany on Wednesday, Abercrombie and Best Buy on Thursday, and then after the close, Costco and Deckers. So a lot of retail coming out. Now, this retail is so oversold, you got to wonder if they can sell them anymore the way they have been beating up on it. So that is a look at our calendar for the coming week. We have lots of good stuff still coming up for the show in here, and I want you to stay tuned because what I'm going to bring you is our best and worst stocks for the week. All right, for the best stocks of the week, we've got some good stuff to look at in here. We'll switch over to the charts again, and I will show you some interesting stuff in here. The best of the week clearly was Autodesk, ADSK. Now, this is what's really interesting about this stock is that, sometimes patterns do fail, And I had talked about kicker patterns, and this was one of the stocks that I said had one. Now, when earnings come out, of course, anything can happen. It's a 50-50 coin flip, and in this case, the earnings came out like really good, and this stock soared to the upside. The cyclical patterns in here are pretty stable, as we would say. They're really consistent, and you can see in here that, well, this was the area that we were looking for a low, and that's the low that came right in here. And then this next rally phase accelerated up here as the earnings report brought a big upside gap. So here I am talking about kicker patterns and telling you how good they are, and of course every once in a while one is going to fail. Here's your downside kicker, and here's your massive upside move in there as these earnings report really beat, and analysts really like it, and it gets a big jump in there. So Autodesk has a big upside move, 17%. Pardon me, 17% on the week. Next one we're going to look at is a reborn stock, reborn tech stock, and that is BlackBerry. You could see BlackBerry right in here. Look at this stock, guys. It comes from about 6 3/4 up to about 10 and near 10.5. What's reborn about it? Well, we remember all the talk about how solid their system was back in the time of 911. It was like the only thing working, and they have really moved into other areas, especially into security. And now that we had this WannaCry virus that came out, well, this one's really got a bid. I gotta tell you, I'm a believer in this stock really at this point. You can see there are nice cyclical patterns in here. Now remember, these cycles are the ideal cycles, as if it went up half the time and down half the time. The real cycles are how the stock trades. This is what's called a right-hand translation, as it goes up most of the time. This is a left-hand translation, as it goes up, well, just less than half the time, and then leaves more time to fall. This is a massive right-hand translation, and only leaves into sometime like late June or early July for a correction. Man, when we get that, I think you jump all over this stock. You could easily see this stock go from like 9.5 up to like 12 or 15. That's a good looking stock there when we look at it in BlackBerry. Take a look at this daily chart, and you'll see in here, there's your bull kicker. You can see that. I'm going to show you some of those these days, as you can see the value. Massive bull kicker. That was a breakaway gap. Slim ribbon turns bullish. That's this one right over here. You can download the slim ribbon if you have the TOS platform right on askSlim resources. And you can see it's been positive all the way ever since. Tested the 13-day moving average a little bit, but BlackBerry, a good looking stock when you look at that. And I would be a buyer of this stock any opportunity that we get a dip. Interesting stock right now is Deere, up 7%. Big upside move as their earnings had a big beat and they guided upward. This was a surprise. They do live and die off of the maybe not as much as they used to, but pretty much off of the farmers of America. When grain prices are strong, then the farmers have a lot of money and they buy farm equipment. Deere is still a farm equipment company besides doing other things now, and this stock here gets a big upward move. Take a look at Deere, and you can see in here our colored cycle phasing. The green phases being the rally phases, and the yellow phases being corrective phases, and red saying it's a downward phase. So when you get a breakdown into a red phase, you get a big drop, and when you get bullish patterns like this, you get big continued rallies. And that's what happened right in here as Deere makes a new high, and that is a very, very solid upward move that we get here towards the end of the week. And I would say, just based on extrapolating the cyclical patterns that I see in here, yes, that's technical jargon for it's going up and it's probably going to correct right there. You can see that, and then probably be in decent shape right over here. I get that from this right in here, and that's pretty good solid cyclical patterns that we see. You can see this one right in here, nice. Nice, beautiful. So that's how we read the patterns. And this one says, well, it was only in its 4th week of the advance. You could expect further upside, and that one certainly did so. So good earnings in Deere, and it moves strongly to the upside. NVIDIA, NVDA, is a stock that really resumed nicely to the upside after a big correction. You can see in here the cyclical rhythms. Now, they're almost not readable right in here. You see this little dip? Is this right here? I mean, that's only hindsight that can give me that. I'll tell you that. But then you see the clarity in this declining period here, and then the rally period right here, and that's nice. Now, it's gotten into this resistance zone. Those are 618 and 78.6% extensions that come off the percentage gains of past cycles. And that's often a place for it to rest. So we're going to look for the potential for this to be a place for NVIDIA to stall. It moves up 5%, as analysts absolutely love this. And this is a tough spot for it, though. But analysts all over the place. Now, I'm going to show you a lot of retail stocks again when we get into the worst of the week. Walmart's a standout, really. I mean, it reported earnings, and it really is bucking the trend. Their online sales were better. Their earnings were better than expected. And you can't really deny the fact that the pattern has been able to hold up while much of the rest of the retail world has come apart. Does this mean that Walmart's going to be able to compete with the likes of Amazon here? Well, they better really work hard to do so. Amazon going into pharmaceuticals, Amazon coming out with even more extensive grocery shopping, and Walmart is supposedly the best place to shop for groceries price-wise, that maybe Walmart will have trouble soon. Our patterns, even though it's been bullish, are suggestive of the fact that timing-wise, it's likely to make a peak. Now, we don't have any sign of that yet. It's gotten through this major 618% right there. That's a good sign, and the next resistance is up probably in the mid-80s. We haven't put that in yet. However, you know, this is getting kind of long in the tooth right in here. When you get rallies that are really long, like you see here, you often get some big sharp declines like you see there. That wouldn't be bearish. It would just mean that the stock would retrace into the support zone around 75 bucks or 74 bucks over here. So that's not a bold call in there, and it's been acting really solid. When I look at the daily chart right here, you can see in here that, I mean, it has been so strong that one of the few stocks that our option bias ranking showed an overbought in that did not tick down. I mean, that the quality of that signal is about 70%, and this one could not tick down at all. Slim Ribbon was positive the whole way. You could see right here, never gave up being positive, corrected into the support area in that corrective phase. Note the corrective phases and how perfect they are in here, and now moving up right here and gapping away right there. So really strong when you look at those earnings. I've one more stock to talk about in the best of the week, and this is in my universe, but not one that I look at very much because it tends to be boring. That is Colgate. We're going to look at CL, and Colgate was not so boring this week. And we're going to look at, again, we always start in the weekly patterns because those are the most solid and important patterns when you look at cyclical patterns. And you can see in here, there was a decline due right in here, and it extended. It was pretty long right there. And the decline due right here, and there's that one right there, decline due right here, but this was that powerful right-hand translation that gave you that rally. And right in here, well, that's only the 3rd week of the advance, so that's pretty good. So yeah, it pulled back again, and it moved. The stock is up about 5% on the week. But look what's going on here. Big volume, big gaps in here, and there are rumors. Now, I'm not a rumor spreader, and when I say something, I say it's going to be a rumor, but the stock is 74, and there's talk of a $100 deal somewhere. It probably isn't real. However, this is that, if there's smoke, there's fire scenario. And you can see in here that big buying and the support off of that 89-day moving average. So that's a look at Colgate, a boring stock that may be in play. I think pretty interesting and maybe worth a look. That's a look at the best stocks of the week. I'll be right back with the worst. All right, for the worst stocks of the week, it's like it's a broken record here. When I put these things up, it's retail, retail, retail. Retail has just gotten decimated. There are times in history where that happens, and it's not that important to the overall economics. Question is, at this time, is it about the consumer, or is it just about the changing nature of the retail environment of the world, right? When people stopped using buggy whips, the economy didn't fall apart. It's creative destruction, and what you're looking at here is the free market at work, creative destruction going on as the retail stocks continue to just get decimated. The worst stock of the week, we go back into that teen retail category that's been so bad, and that is American Eagle Outfitters. Take a look here as we look at this ski slope decline in here, and we're looking at what has been a continued downward movement in cyclical patterns in here. You can see when you have a primary trend that is so strong on the downside, then the rallies fail and bring you large declines. The rallies fail and bring you large declines, and then probably a bounce in here that brings you more on the downside. So this one, well, it bounced right up to that resistance number perfectly that you see right there, and then turned south as they come out with very weak guidance along with their earnings this week. You can see in here this massive volume on the downside right there. This has been trying to get out of the negative momentum. You can see in here that it was gray bars in here for just a little bit. It neutralized, but here's where the negative momentum started right there, and that was up around 15, and of course the stock trades down to 10.5. So a ton of weakness when you look at in there. We'll be expecting a bounce in there, but not likely to be able to give you much. Down 20% on the week, and the same thing for Foot Locker, down 20% on the week. This one is new to our universe. We're just starting to put some cycle rhythms in here and identify the flow of funds in and out, and you can see right there that this cycle low is right here. You can see that right there. This one is a little bit off, so it doesn't have really perfect cycles. These are spot on. You could see right over here. So when we see those repetitive lows and the rallies and sell-offs in the cycle rhythms, and then we see the breakdown under the 34-week moving average, man, is that beautiful. It's got a week or two maybe on the downside in here before it gets a bounce, and then probably gets, well, cracked again. So that's a look at Foot Locker on the weekly chart. You could see the daily chart in here, and look at that screaming head and shoulders top all the way across there when you look at August to May, and was trying to hold up around that 89-day moving average, and then it has this big break to the downside, massive volume right there as its total pukerage, as everybody is just bailing out of there. Like I say, maybe another week or two on the downside, but that is a stock that is finished when you look at that. Appropriately, we're going to look at SHLD right now, which I had talked about, the rally being Fantasyland. It's down 18% on the week. You can see in here it trades perfectly based on our analysis. So this is cycle peak resistance right over here. It gets right back up to it right there, and there's something good about that. If it can hold above this level over here at 5.5, and it's now 794, then it has the potential for an inverted head and shoulders, and this you could see the cycles forming that in here. It's going to need to complete this cycle all the way out into late June and not make a new low for it to be possibly creating a bottom, but you can see in here the decline as it falls from, well, nearly cut in half again as it had that rally and then gives it up to the downside. Take a look here as we look at one more in the category of retail. This is Dick's, and Dick's Sporting Goods. Look at that, this cycle violation that we warned about a week ago, and you could see that it was perfect as it did that right there. And now what it looks like to us is that it has all the way out here till August, and by the way, that's when we think the stock market correction is going to go down to, all the way out till August. And I'm stammering on this because I like it so much. Perfect cyclical rhythms. You can see in here as money in and money out. Perfect based on this. Money in and money out. A new high just like it was supposed to do. That's this right in here. The breakdown under this level. That's the key, and that's after only 3 weeks of advance. Gives you all of this time to fall. A rally and the breakdown and all of that time to fall. That's August before that low is in place, and that says some pretty bad things about Dick's. The retail section, I mean, I can just go on and on. Gap Stores down 11%, Urban Outfitter down 10%, UAA Under Armour down 9%, Lululemon down 8%. All of these patterns are negative. All of them look bad. One more I want to show you, and it's one of the stocks that has basically gone down, but has avoided annihilation. Now has just set up a pretty negative pattern. This is CVS. So yeah, it came down and gave what looked like a basing pattern. Now what is a basing pattern? It's the low that was due here and the low that was due here. Pretty nice. It says that the odds are pretty high it's going to take this level out. But when it doesn't, and then it takes this low out, that is ugly. And guess what? This is August again. And that says that this decline in here goes to August. I think if you get any upticks here in CVS, this one, which is only down 5% this week, is likely to pay you on the short side. And look at it break here on a gap underneath this 89-day moving average. And I have a feeling that this one, which is now just resuming downward momentum, is likely to give you some pretty good downside in there. So that is a look at the retail stocks, and I have a couple more stocks to show you in the worst of the week. Take a look here at PBR. Now I'm not going to show you EWZ, which is Brazil, but we're looking at Petrobras. So this one in here we actually thought was turning positive. Now that's a frightening looking chart. Now that we see what's happened in here, we saw these lows right in here, and they were early bottoms based on what we were saying, and we thought it was positive potentially. Now that's negated. So yeah, we're likely, it came down a lot when you get a 17% drop. Maybe we have another week or so, then we expect to get a bounce right in here, and then probably pretty big to the downside again. Note the head and shoulders top in here, that is gorgeous. And the measurement down way over here around 7 1/4. So that's why we think it may have a bounce, but then come way down back over here, and that is what looks like a pretty bad pattern in Petrobras. Petrobras, the petroleum company of Brazil. And one more we're going to look at in here, CSCO. Here is Cisco. Now I pause for a moment at the beauty of this chart. First of all, the colors are pretty. Second of all, the chart is magnificent. And it's a perfect example. And this is, a little peek at my, and a little tout of my workshop that's coming up on cycles. But this is a perfect cyclical pattern in here. And you note the M top or double top right in here, the right side being an engulfing pattern. So this cycle decline gave you the left side. This rally gave you the right side of the M. and then you get a breakdown right there. It gives you this big red zone, and yes, down into late August right over here. What is this telling you about the importance of the August date? That's incredible when you look at that. Cisco, which has just been a great market leader, and I've talked a lot about these kicker patterns this week that are in the tech stocks. I showed 10 of them, one that already failed that I showed you today, that are signaling that there are sellers coming in these way overbought tech stocks. That in this case, one of the giants, Cisco, has a breakdown. And that looks to me like it's going to mean that there is some more decline coming in the entire tech sector. You get that breaking down, there's trouble there. We're going to be right back with a short-term view of the stock market for the coming week. All right, this is our short-term view for the coming week. We're going to look at the stock market. Before I get into that, I just want to tell you a couple of things. We are going to be putting more things in our level 1 membership. There's some really good surprises in there where we're creating some things at no cost that really will support people learning about the markets and people interested in being able to access easily a lot of other sites. And well, we really want, you know, to pay it forward for all the success that we have and really make it easy for a lot of people to become part of the askSlim family. So become a level 1 member, and then you can we'll start to see things. Already there are 6 free videos in there. You'll be able to see my recent gold analysis and why I think gold stocks may be ready for a big move, and also my big picture analysis in the stock market that talks about history of corrections and why I think it's a 2,000 point decline coming soon in the Dow. So you're going to want to watch those. Just go to askSlim.com, sign up for level 1, no cost. And you'll be able to access that, and lots of good surprises coming also. And I also want to ask you to share this video. You like what we bring, you think it's valuable, you know people that are in the markets or trying to get in the markets, or you know, like some of my, you think would enjoy some of my commentary, just share the video on YouTube and send it to other people, and that would help us a lot. And don't forget to put a thumbs up and tell us that you like it. We have lots of other things in askSlim. You can go to the membership page and learn about all of our memberships. We've got some specials. You want to hear about them, you can write me about that. So be sure to become a free level 1 member, and also to share this video. All right, so now we're going to take a look at the S&P 500. Now I got to tell you that, you know, I do a much bigger video on this right after I finish this show for all of my members. I don't even want to tell them how poorly I did in the last week, because it's like I got cross-ruffed. I mean, there were so many things going on in the markets that move things in directions differently than I expected. Actually expected the market weakness that we started to see this week, and maybe resuming here on the close on Friday, I expected that to come in another week or a little further out. But now it seems like it came already, and all of those things really affected the markets differently than I expected. Now, what I said for the stock market last week was that I thought it would come down and then move up. Well, basically it did that, right? I mean, I thought it would be down early in the week. It took till Wednesday till we got the break, and then we got the rebound. So the shape of the market that what I was looking for. But the amplitude of the decline and the rebound was nothing like what I expected, and sends strong messages clearly. So we're going to take a look at that chart of the S&P 500, and then we're going to take a look at what we think is coming in the next week. So here is that bear kicker pattern again that I showed you. I mean, that is a very significant pattern. That shows a sentiment change in the market that couldn't happen unless this pattern right in here was actually rolling over. That's the message that we get out of that. That is very important. I would say the probability of that being wrong is low. Of course, there's always a probability of that. And I'm certainly wrong enough periods of time. But this one really looks to me like there's trouble out there. So there are two scenarios that I have in here based on what you see in here, and they're both bad. Typically, when you get a move up and fail in these minor resistances, as we're doing here on Friday, you get further downside after that. And you tried to get into the gap, and it can't. The fact that it got down near the 78.6% confluence area there is bad also. If this is the pattern right in here, then it fails in here and then comes down. If, these are big ifs, right? If this is the rally, in other words, that's this right over here, then it's already failed and coming down. So all I see is a bad scenario in here. We're going to call this next week a down week, and that the risks are very high and that it can accelerate on the downside. If it were to move to the upside first, which of course is a possibility, you can see that little line right there. I can get a little closer look so that you can see it right here. That is right around the area of 2394. Now it got up today to about 2389. It doesn't have to get there. It might get there, but then we think it would roll over from there, or we think it doesn't, possibly not get there, and then that failure is in hand, and then we move down again. We expect this kind of action right in here that you see right there, and if we're right about the primary trend or the intermediate trend switching to the downside, it would look like this. So a decline sometime next week, some kind of a rally into the following week, and then another decline right over there. So that's us following this, but then using the downward trend that we see to skew the cyclical patterns. So that would call for downside in the market, and we think that that is highly likely for the next week. I think. We'll see. And of course, everything I look at is just simply the weight of the evidence. And I would say I'm right about maybe 60%, 65% of the time. That's a pretty good edge. And I hope that if it's right, it works for you. And if it's not, well, that you can see that and kind of step out of the way. So that's it. We looked at a ton of stuff today. I hope you enjoyed the show. Don't forget, sign up for level 1. We're going to bring lots of good stuff for you. See the free videos. We want some special to get a free a 1-month half price look at our other levels of membership. You can send me emails on that and share the video. I think people will enjoy it. That's it for this week. It's dangerous out there, so I want you to be careful. We're always wishing you great trading.